back on now. I had to set up the audio capture.
All right, but
All right, so yeah, when we're doing pre-market analysis, and I'm gonna talk about this in the next course. It's not in the beginner's course. I might either update the beginner's course to put this in, or I'm probably gonna put this in the profitability accelerator. I haven't decided yet.
all right.
But regardless, you always start with top-down analysis. So I look at the weekly chart, and then I'll just mark the top of the week, and I'll mark the bottom of the week. So this is the weekly high, and this is the weekly low, and then obviously we have all-time high up here. So those are all key levels that I'm gonna mark right there. Um, the weekly high and the weekly low. So we got and then I'll go on the daily chart. Maybe I'll like tighten up the levels. So 512, we got 5. Maybe I'll just change this to like 521 because it's close enough.
All right.
Not much to really see here on the daily chart. You see, all right, 512. I can definitely mark that as a strong level now because we got multiple bounces at that area. So I can say, all right, 512, definite buyers. Let's go down
Right.
on the 4-minute chart. I turn off the pre-market first just to look and see the regular price action to see if there's anything else that I can find.
You're on a 4-hour chart right now.
Yeah, I'm on the 4-hour chart. You want me to
All
slow
right.
down
Yeah.
a little bit?
No, no, you're good. You're good.
Okay. So yeah, I turn off the pre-market or extended hours. Look at the 4-minute chart, see if I can find anything. Don't really see much, but because yesterday, since I'm always, I'm paying attention to what happened yesterday, I also marked the low of day and I marked the high of day for the previous trading day because those are obvious and easy levels that we can definitely see some kind of interaction with price if we do get there.
All right.
So you can see like 512. That was yesterday's low of day, and today in the price action for SPY, we tested 512 again and we found buying. We found buying on the 10th. We found buying on the 11th, and today's the 12th. We still found buying at 512, and
Right.
that was also the weekly low. So that's just like okay, those are multiple different reasons why this low is actually holding up because the levels on the higher time frame always have more emphasis on what's gonna happen with the price action.
Right.
So all right, we that was a 4-hour chart. Now I'm gonna turn on extended hours. Let's see if I can see anything else.
Wait, what is extended hours? I don't think we have that on TradingView.
Uh,
Oh, the
you
aftermarket.
should. Yeah, that's just the pre-market. So in on actually, I'll later I'll look on TradingView and I'll see what it looks like so I can like specifically help you out with that. But it's literally just the pre-market. So on TradingView, it might tell you like um I don't know. I actually have no idea because I haven't used
All right.
TradingView in years.
All right. That's really right.
But I guess what you can do is just look at the look it up and see what the hours. You're Eastern
Yeah, I'll look it
Standard
up.
Time, so it's 11:30 for you too. So all right.
Yeah.
So from 9:30 to around I think like 4 o'clock, 4:30.
Yeah.
That's the regular market, right? And then
Yeah.
from 4:30 to 8, that's aftermarket, and then
Aftermarket.
from
Yeah.
4 a.m. to 9:30,
Pre-market.
that's pre-market. And
Yeah.
pretty much the aftermarket and pre-market, that's where the price action that you're gonna look to kind of see what happens overnight. So it will have like emphasis on how your stock trades today, and it's just something you want to pay attention to. You won't always like see any like information from it, but always just take a look at it when you're trading stocks because there's most of the time there's valid information that you can get.
Yeah. Right.
So don't really see much going on right here, so I'm not gonna mark anything out. On a 4-hour, went on to the pre-market. Still didn't really see much, so I'll go down to the 2-hour.
All right.
Still not really seeing much. All I can see is just more evidence that all right, 512 is definitely where buyers are stepping in, and you can
Wouldn't you
look.
kind of like mark it as a support and resistance?
Yeah,
Because like you see the top part
yeah. This
and the
is
bottom part.
yeah. This is resistance, and this is support.
Oh, all right. Yeah, yeah. My fault.
So if
I
it
was
if
on
it if
bro.
it helps, what you can do since you're a beginner, and I honestly still do this too. Like, go pull up a text box and mark, like, take notes on the chart. So when you go
Yeah,
back,
that's what I'll be right.
yeah. I mean, I've been doing this for so long. I don't need to do this no more. But like,
Yeah.
Definitely go ahead and like always mark up the chart so you know exactly what you're looking at, so you don't have to use extra brain power to try to reinterpret the analysis you did in the past.
Right.
But the best thing you could do, just keep doing as much analysis as possible so you can get good at it, so you can recognize, okay, this is obvious resistance right here. Look at this. We keep finding sellers and we keep rejecting around this area, so that's resistance. Keep finding buying at this area. We keep wicking at this area of price at 512. So that's support. Easy.
Right.
4 hour. I mean, I'm on the 1 hour now. Still not much to see. Same information that I'm seeing from the higher time frames are still, acting and validating. So, kind of just gotta just keep it pushing. Just keep dropping down, seeing what I can find. Again, still not much. The only thing that I would have marked is potentially, what is it? So this is where we closed yesterday. We closed right at 518, right?
Right. Yep.
And obviously we in the pre-market we came down, we retested 518, and then we opened lower, and then this has happened. So I would definitely say like somewhere around this area 518 I'll also mark as like an area of resistance or potential area of sellers. I don't have any like real confirmation to show me that there is definitely sellers there, but I would
Right.
definitely just mark it because there's the potential. So I want to be aware of it. I don't want to forget about it when and then next price comes, I'm trying to trade it and it goes against me and I don't really know why.
Right.
So the 30-minute, not seeing too much. 15-minute. So I do see right here, roughly, I did trade this the other day. So, but just say this like I'm brand new. I'm not looking at this. 516.
Right.
I see that we do have a level here because and I'll mark it up for you so you can see exactly what I'm talking about. So
Like a key level.
yes, and
All right.
this is why. So I have the cursor. You have like the side. You can see the sides and stuff like that. Where
Yeah.
it shows like where it is and what level like the cursor is on. So I'm kind of always looking like left to right to see like where price is interacting with it to see if there's a potential key level. So I see that okay, we have a bounce right here and then we went up higher and then we have this right here, we have this right here, and then we have this right here. So
Right.
that shows me anytime we come within this range, we see a rejection, and we rallied up way above that key level yesterday, and even in the pre-market too, we came near that area again, and we did bounce before testing 518 again. So I can
Right.
actually mark that and say, hey, there's got to be a key level somewhere around here, or
Yeah. I
so
agree.
that's so 516 I'd mark that as a key level because we have multiple interactions. We have 1, 2, 3, 4, 5 different interactions where they've all been validated as a key level. So it was a
Right.
support, we got but down below, it became resistance, broke above, it became support, broke down, acted as resistance again. So just based off of that, I can easily say, okay, we're more likely to treat this as resistance right now because we're below it. But if we do get above it, then I can obviously make the inference that demand overcame supply, so price could go higher, and I could target the next area where sellers are potentially going to be. And I marked 518 right here, so I can say, all right, I could potentially target 518 as where I want to go if we get above 516 because this is the next area where sellers are likely to be. Um,
Right.
and think of your support and resistance or like areas of supply and demand as like magnets. So price always wants to reach one of these areas of imbalance or these areas of buyers or sellers, and pretty much in between what's going on is kind of just noise and nothing you should really be paying attention to until we hit one of these key areas, because these key areas are where you're gonna have the highest probability of taking a good trade. Like you're not gonna Obviously, yes, you can come up with some kind of setups and stuff like that here in between, but they're just not going to be as high quality because they're not being validated on higher time frames, and they're just not key levels. So like even look at the daily chart. Like I found that chart on the 1 minute, right? Hold on, let me do
Right.
this. Look at this on the daily chart. I found it on the 1 minute, and we're still seeing interactions on the daily chart at 516. So that gives me even more confidence that this level is a really good level because we're seeing interactions on multiple different time frames. It's not just like, okay, this works on the 15 minute, but it's not being respected on the 1 hour or the 2 hour. Like the more time frames a level is being respected, the more likely that it's going to work and like, have some kind of reaction where you're gonna be able to capitalize.
Yeah. So like the more confirmations you get, like the more confident you feel about the trade.
Exactly, bro. That's exactly what it is. The more confirmations,
All
the better you should feel about the trade. The more confident you should feel about the trade, and obviously, if you figure out what you want to risk on that, and then you take advantage or you cut your loss, right?
right.
And that's that. So now I'm on the. Well, this is for today. We're still pretending that today didn't happen, but I can definitely say that. Like, okay, there's sellers up here because we rallied, and then we immediately sold back down, and then we got down. So yeah, potential
Right.
sellers up there. I marked 518. There's probably sellers somewhere up at 519, 550, 519.5. So I don't really need to mark that. Um, and then let's see, is there anything else that I could potentially mark to see? So like maybe I can say, I'm on the 15-minute chart. 515, right? Maybe I'll mark that, or I'll definitely say like 513, something like that. There's demand down here because 512 we're wicking buying, finding buying, and then we get that last red candle, and then the rally up, like a super strong rally up at 513.
Right.
So actually, I didn't even teach you guys this yet, and this course isn't out yet. So but this is just a demand formation and another way to identify whether there's buyers. But look at all the candlesticks, look at all the wicks and stuff like that, and look at every single time we reject off of the support. So just using that concept alone shows you that there's buying. You don't even have to think about supply and demand in those formations yet. Um, but you can easily make the inference that, all right, sellers are at 516, buyers are in the area of around 512. So now if I do want to trade it again, I just got to wait for some kind of confirmation, some kind of evidence showing me that there will be buying again, and I could take advantage of a trade. And like, say this is today's price
Right.
action now, right? We open up here at 514. I'm not going to trade that. I'm
Mm-hmm.
not going to do anything. But I might see that in this area right here, we rally up close to 516. We're not always going to touch it. It's a support and resistance, yes, but don't expect it to ever hit the penny. You just want to use the context of like where price is trading
Yeah.
near it.
Yeah.
Because support and resistance is more like a zone. Because remember, it's areas of buying and selling. It's not necessarily this level is exactly where selling is going to be. Sometimes it'll work out like that, and it's nice when it does, but not always. And most of the
Right.
time, not at all.
Right.
But we came up to 515.8, 20 cents away from 516. So that's still an interaction with the sellers, or resistance at 516. So, and then after that, right? And this is the 5-minute chart. So
Mm-hmm.
after that, we see this strong candle up, and then it closes down lower, and that indicates to me that
Right.
we
So
had buying at the open and we rallied up, but there were sellers up at the high. So
right.
maybe seeing this candle right here, I can say, all right, I want to take it short, and I want to try to target maybe the low of day, which is where SPY opened, and then the low that we touched, because we might always find buying at the low again, and you can see that we did before we broke down, and you could target that as a scalp, or you can, if you really feel like holding it that long and you want to target the next extreme and the next area where there's definite like a higher time frame area of buying, or just target something like that. You can easily say, all right,
right.
I'm gonna target 512, after going long here, or I mean going short here at five, wherever you get your entry, and that trade would have worked, right?
Right.
or you can wait and you can say, I definitely know there's buying at 512, so I'm gonna wait for some kind of interaction and some kind of structure to show me that there will be buying again. So we had the selling at the open. We rejected off of
Good,
516. You see, we got this.
Rooms in the whole library.
Yeah.
It's nice. You get to like sit here and just take it all in.
Right. It's all good.
Right. What do you guys work
on?
Economics.
Yeah.
Economics class. Visually,
Yeah.
Yeah, that's what it looks like.
Yeah.
Yeah.
He's reading like what's it called? Stocks.
Yeah.
Yeah.
Oh, I know. It's all the time. Crazy stuff.
Yeah. Yeah, my fault, bro. I got my teacher. He's walking around.
We learning economics right now. Yeah, nah, you was smart to say that instead of trading, bro, because you
I'm glad you would have started asking so many questions. Like.
Yo, you're bad funny for that.
I keep going, bro.
All right, so yeah, so we got the rejection at 516, and then we make this. We in that market structure now of making the higher low. I mean the higher lows and the lower highs. That bearish market structure. So we got this higher low right here. That's the first one. And then we got this one right here. So we're in a bearish market structure now. We got the lower high.
Then
no, this is the lower high. This is the lower low. My bad.
Yeah.
My bad. I probably was confusing you. And then all right. So that structure is continuing, and now what you're gonna look for is a shift in that structure, right? So you're gonna look for a shift in that structure while it comes down to that key level where you want to see buying. So like you can draw that trend line right there to show like, all right, visualize the structure easily for you. And then we come down to that level, we have this hammer candle, and you obviously break this down, visualize how this hammer candle formed in your head if you weren't able to watch it in real time.
Right.
You see that that means there was selling, price came down to 512, and then we immediately bought back up and closed actually higher. So that shows, okay, demand is here, like buyers are definitely here at this area. Is that where you want to take your entry? You definitely could, and the trade would work. You would just have to say your stop loss is if we validate below 512 and we close below 512. So you would hold like within this red candle, and then this is where we break that structure right here because we start moving kind of sideways, and then we start making that lower high and then those higher lows and stuff like that. So you got the lower highs and then the higher lows, and then the higher highs and stuff like that. So that means like now the structure is kind of changing a little bit. So that's like if you bought right here and now the structure is changing, like you would have made money on that trade, and you're trying to pretty much anticipate and see exactly where is the point where the structure is going to change so you can take that trade. So like now I'm on the 3-minute chart. You can see it again, like it's more exaggerated. You see all the buying that comes as we come down, and you see the interactions between the buyers and sellers, and then we break this structure, that trend line we break out. So you could have entered right here, stop loss below 512. You could target the next area of selling or resistance at 514. You would have made some money, and just like that, like that's how you would come up with plans, and that's exactly how I come up with plans.
All right, I see. That's pretty good. I can't lie.
Yeah.
You teach fair value gap, right?
No. I don't use any of those concepts. The only thing I use is supply and demand and
You don't really do that, right?
support and resistance. So obviously we went over support and resistance, and then volume and price action, which is what I was just explaining, where you're visualizing how the candlesticks were formed. You're looking at the volume underneath it to see if there is high volume to show you that that candlestick does actually have some kind of strength, and just identifying where buyers and sellers are and capitalizing based off of all of those things combined and market structure and stuff. So I don't teach fair value gaps or any of those ICT concepts. I developed this strategy well on my own before that even became popular. It works, but why would I use it? Because I have my own strategy that works for me. So
The thing is that what I like about your strategy is like it's simple. Like other people is like kind of really complicated. Yours is like simple,
yeah,
and you get profit.
yeah. There's no reason to complicate it because regardless,
Exactly.
any of these strategies that you use all work off the same fundamentals that I am using right now. It's just a
Right.
different interpretation. So like, you know, I like this is a fair value gap right here because don't get me wrong, I did look into it. This is a fair value gap right here, right? But didn't I
Right.
already show you that this price action shows you there's sellers here, and if there's a fair value gap, somebody might come to test this to try to take it short. But I already identified sellers with my strategy, and
Exactly.
I'd actually have found it earlier because I looked at the price action itself and the volume and used the context with market structure and my candlesticks, everything that's going on, and yeah, I mean, that's it. So like that support trade that you took the other day, and you circled all of the confirmations, you circled all the areas where we bounced. That was
Right.
perfect, bro. Like that is exactly what I teach, and like
Exactly.
you understand the concept like perfectly. So just do that again, like rinse and repeat. You're gonna be good. Like, and you could have took advantage of that again today. Like, look, because you took it
Exactly.
around 512. We came down to 512 again, had the same kind of evidence. It's
So it's
yeah, and that's it.
just
And
like, no, no.
and then once you learn the supply and demand, and then once you actually go through the volume and price action course, and then I'm working on right now. What I'm working on is the profitability accelerator course, where I'm going over all the psychology and all of the different things that's gonna affect your trading. Because honestly, that's
Yeah.
more important to me for you guys right now than learning supply and demand. Because you can make plenty money off of support and resistance alone. The support and resistance and the stuff I taught you in the beginner's options trading course, like I said, that
Right.
is everything you need to start making money. And then the psychology is what you're gonna need to start taking it far. And then having supply and demand, and then going deep with the volume and price action. That's just gonna take you to the next level of analysis. But
Yeah.
it's not necessary. Like all of the concepts use the same supply and demand principles that I teach. Like these, finding supply areas or finding demand areas in the formations. But I told you the fundamentals in that course, and you understand it now. And anytime we have these like one-on-ones, like I'm breaking it
Right.
down, so I'm framing your mind to think in that way anyway. Because ideally, like what I'm teaching you isn't a strategy. I'm teaching you a way of thinking and a way of interpreting the market and reading the
Right.
market. If you can read the market, you
Exactly.
can capitalize on the market. You don't. It doesn't matter what strategy you have. If you can read it and you can understand it, you can take advantage.
Right.
And that's
Um,
it.
how many like you say you have like how many stocks do you look at before I think it's like 12. How many do you look at?
Let's count. So on right here, these are all the stocks that I watch. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16.
16.
Yeah. So
Like sometimes
what were you saying?
like sometimes because sometimes like a certain stock doesn't have like this like perfect, not perfect, but like a good setup. You know what I mean?
Uh-huh. Right.
So like
So
you just move on to the next.
yeah, so it's always
Yeah,
just
like
looking for which one has the best setup in my opinion, which one I like. And then like I watch 4 stocks every single day. I watch
Right.
SPY and I watch QQQ because that's the overall market, right? That
Right.
represents the market overall, and that's gonna affect all of the other stocks. So I'm always watching SPY and QQQ, and I'm always ready to capitalize on SPY and QQQ. So I'm
Right.
watching that every single day. That's like the bread and butter. And then if I'm watching like say Tesla or like Apple for example, I've been watching this for like weeks at this demand, right? And I'm actually gonna make a
Right.
video on this today, because Apple released news that they're releasing AI chips and they're gonna integrate it into all of their technology. And
Right.
one common thing about stocks is that price will always like precede news. So sometimes price action will show you that something big is coming. and then they'll drop news, and then it'll follow your analysis like to the T. There's a weekly area of demand right here. This is a demand formation. This is a drop and then a base and then a rally. And what this means is that pretty much we had sellers, right? And then we had a strong rally up. So that means that there's an imbalance now. There's an imbalance between buyers and sellers. And people who want to buy at the best place possible. And they were pretty much left behind. So that means that this area is where buyers are likely to be positioned again, because that's the most favorable place to go and buy something again at like the best price, especially because there's evidence that price went up super like crazy when we reached this area. So why wouldn't the psychology of the masses try to buy it when we get here again? And look at this.
Exactly.
1 week, 2 weeks, 3 weeks, 4 weeks, 5 weeks. We traded at 170, this area of demand. We could not get below, even if we had selling. And then, we had that market structure where, on the daily chart, with the lower highs and lower lows, slowly selling off. And then, the last day we get the lowest we ever did, the most discounted we ever got in this area of demand. And then the next day they release news. And then look at that crazy rally. And then look at this again. Like that's it. Like you're just doing that rinse and repeat. And then again, like look at this now. We created another demand formation down here. So like say price ever comes back down to 169. That's an area of demand again, and I can easily say that buyers are likely to be positioned here because look at the strong rally out after we came in this area. So, and just thinking about that, and combining it with the concepts of support and resistance, because I have supply up here and I also identified resistance. So that's like 2 different confirmations showing me where sellers are. And look how that went to the penny. So I knew just in general there's sellers in this area. And then I combine that with resistance, and now I can say, all right, maybe there's really, really definitely going to be sellers, and I can really be confident that there's sellers at 178. And look at where we rejected. 178.
Yeah.
That's it. It's really that simple. It's just getting used to it and then having the psychology to be able to take advantage without messing yourself up. And yeah, I mean, looks like you guys learn fast. So.
Yeah. I have a question. Do you think like you could post or like send the video to us?
Oh yeah, you can do that. I'll post it and I'll link it so you can always have access to it.
Over that.
All right. Yeah. Cause I understood like when what you said right now. I understood like perfectly. I can't lie. That helps me out a lot.
All right, good. Wonderful. I'm really happy to hear that.
Pretty much it, bro.
It means I'm doing my job. So, yeah, I'll have the Microsoft recap posted. Not even a recap, the live trade posted. Make sure you watch the whole thing. And I want both of you guys liking and commenting on all of the posts so I know both of you guys are seeing it. Like, I understand you guys are watching it, but I'm posting there because I want the interaction. I want everybody participating. So the 2 of you need to have your own kind of participation. I need to see analysis from the 2 of you. I need to see everything from the 2 of you.
Yeah, I'm gonna try to do an analysis today.
Okay. Yeah, obviously, do what you can. I know you have school and stuff, but yeah, just keep it up, bro. Just keep learning.
Yeah. But appreciate it, bro.
Yeah, got you guys.
Yeah, thanks.
Peace.
Thank you so much.
Peace.
Yeah.